Hello and welcome to this Accounting 2208 Chapter 20 video tutorial on errors related to leases. This video will cover the extra problem that's posted that relates to the Buzzati and Costello lease problem. Okay, so let's just go through some of the basic information that we have here in Part A that relates to Buzzati. We know the company began operations in 2002. That's not a big deal. They follow IFRS. And the year end is December 31st, 2018. And the auditor uncovered some stuff. So on July 1st, 2016, the company began a lease. And what they did is they incorrectly classified the contract as an operating lease. So what that's going to do is cause some problems for us. And now, according to the analysis of the lease criteria, of course, it should have been classified as a finance or capital lease. The present value of the minimum lease payments at the time was $260,000. The lease payments expensed in each year were $32,000 for 2016, $64,000 for 2017, and $64,000 for 2018. And then the other thing that happened is that all lease payments were expensed when incurred on December 31st. In addition, the asset that's acquired under the lease is expected to have a 5-year useful life with no residual and uses straight line depreciation. So that's a hint we're probably going to have to do some depreciation, right? And the amount of interest implicit in the lease is $12,000 for 2016, $18,000 for 2017, and $13,000 for 2018. So we're going to assume the books are open and prepare any journal entries that are necessary for the year ending December 31st, 2018. All right, we know that errors are the hardest thing for students to wrap their heads around, and it's just one of those things that takes practice, and you just have to keep doing them over and over until you get them. And then what you also should be trying to do is break it up into small chunks. So, and it's the simplest part of this problem, or one of the simplest errors, is the fact that the equipment is not properly capitalized, right? We're told that it should be a capital lease, and we know that when we record the journal entry for a capital lease, it's going to be a debit to equipment under capital lease for $260,000, and that's the present value of the minimum lease payments. Then, of course, if you recall your leases, we would debit the equipment and then we would credit an obligation under the capital lease. But since we are 2.5 years into the lease, we wouldn't correct this entry with a corresponding credit for $260,000. I mean, you could, but then we would have to make another adjustment basically for the reduction in principal in the lease amortization schedule, right? So what I've done here is I've included a T account. So what would happen at the inception of the lease, right? At beginning of the lease here, we would have this $260,000 credit. And then each period, right, we have the difference between the payment and the interest. Okay, and so that $260,000 capitalized amount minus principal amortization on the lease will give you an ending balance at any time. And the amount of principal amortized on an amortization schedule, which you should know by now between bonds, leases, and other types of things, is going to be the payment less the interest expense. So in 2016, the payment is $32,000 as given, and the implicit interest is $12,000. So that's a net amortization of $20,000. In 2017, we have $64,000 payment minus $18,000 in interest is a net of $46,000. And then in 2018, $64,000 payment minus $13,000 interest is $51,000. And so when we take the debits off of this account, we end up with $143,000 ending balance in the obligation account, which is basically the amount that we're correcting to bring this ending balance at December 31st, 2018 to what it should be. All right, so the next component of this error relates to not properly capitalizing the equipment. So back here from the previous entry, we have a debit to equipment under capital lease. Well, once that equipment has been capitalized as an asset, right? So here now it's an asset. What we have to do, of course, is depreciate. So what we need to do is determine how much depreciation is missing over that period of time. Now, remember the lease went into effect on July 1st, 2016. And then we are now at the end of July 1st, 2018. So that's a total 2.5 years. So we would calculate the depreciation expense as being the cost minus the residual value of 0 divided by 5 years, right, times 2.5 years, will give us $52,000 in annual depreciation. So this is $52,000 in annual depreciation expense. So we can debit the depreciation expense for the current year. That's what this does. And then knowing that 52,000 times 1.5 will give us the amount of depreciation that should be recorded in prior years. So that's why with prior 1.5 years. So 52,000 times 1.5 years is 78,000. And that's debited to retained earnings because we cannot debit prior year's accounts because the accounts are closed, right? So anything related to prior year, we have to go to retained earnings. So I'll just fix this again. So times 1.5. Okay, so 52 and 78 is a total of 130,000. So we would credit accumulated depreciation 130,000, debit depreciation expense for the current year for 52, and debit retained earnings for 1.5 years of 78,000. So now the next piece of this error, or a combination of errors on this lease, relates to missing interest expense. So what would happen, of course, when we have an obligation under a capital lease, we would calculate an annual interest expense. Well, what the company has been doing is instead of expensing interest expense, it's been expensing the entire payment. So we have to make an adjustment or correction for the interest expense. So because the interest expense consists of prior periods and current periods, so the current year interest is 13,000, right? Because this is the 2018 interest. And then the prior year's interest is 12,000 plus 18,000, right? So that's 2016 and 2017 for a total of 30,000. So we're going to debit interest expense for 13,000 current year, debit retained earnings for 30,000 relating to the prior year's interest. Now the last little bit of cleanup we have to do to fix this error in the lease is to reverse the lease expense related to the payments. So we know that the payments for 2018 for the lease is 64,000. So we're going to credit lease expense because it says it was expense. We presume it was a lease expense account. Credit lease expense for 64,000 to reverse the current year incorrect lease expense, and we can do that because the books are still open. But we also have 32,000 in 2016 and 64,000 for 2017 that was expensed in prior years. So we have to credit retained earnings for $96,000, and that cleans up the incorrect lease expense amounts. So we could actually have stopped there. There's nothing wrong with having a series of amounts to retain earnings, but some of us like our accounts a little cleaner. So instead of having retained earnings debited twice and credited once, we have a net. If we take the debits minus the credits, 78 plus 30 minus 96 is a net debit of $12,000. So what we can do then is we can just debit retained earnings for $12,000 and leave all the other items to retain earnings out. And this now resembles the solution more closely. I think the only difference in the solution is that the obligation and the accumulated depreciation amounts, one comes before the other. But basically that takes care of this error or the errors resulting from not properly capitalizing a finance or capital lease. All right, so part B relates to Costello. Slightly different scenario here. Company leases machinery under a 5-year term. We have an amortization schedule. There's nothing wrong with the amortization schedule, okay? And they're preparing the financial statements for December 31st, 2019. And the draft statements are showing basically a non-current asset net investment in the lease of 65,094, right, which happens to be that number there. But there's an error in the presentation, and really what's resulting in our errors for a couple of things here is we know that and the key here is the lease is in October. So there are 3 months that actually belong as a receivable. So basically, here we are. This lease currently goes to the end of 2019. So what you're going to see is 1/3 of that lease expense over here needs to be receivable. And then what's going to happen, of course, is the principal reduction is going to be a current asset. And then this long-term, or this remaining 38,250 needs to be classified as a long-term asset. So we'll just see this in the next slide here. So I was saying before, basically, at the end of 2019, an interest receivable, right, has to be recognized for 3 months of interest from October 1st to December 31st. So basically, that 5208, which is the next period's interest, right, 3/12 of that to go from October to December needs to be set up as a receivable. And then the next period's payment of 26,843 needs to be considered current. So basically the current assets consist of the 1/3 interest receivable of 1302 plus 26,843. So that's what we'd see on the balance sheet. 28,145 is a current asset, and then the remaining balance in the lease amortization schedule just needs to be classified as long term. So just a couple of minor errors in this particular case, but errors nevertheless. And that pretty much solves it. So this one was a pretty straightforward, simple error. So this concludes the Chapter 20 error analysis tutorial. I hope you found it helpful.